Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 10th of July. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Brazil's currency plunges as Donald Trump hits the country with a 50% trade tariff.
Macron and Starmer agree to closer defence and energy ties and discuss steps to stop migrant channel crossings.
Plus, getting back on track, Puma and Adidas look to running shoes to turn around their fortunes after losing ground to smaller rivals.
Let's start with a roundup of our top stories.
US President Donald Trump says he will impose 50% tariffs on goods from Brazil, citing what he called the country's insidious attacks on free elections. The Brazilian real slumped by nearly 3% against the US dollar after the announcement. Bloomberg's Washington Deputy Bureau Chief Laura Davison says it's a big escalation.
Brazil actually had an original 10% tariff on Liberation Day. This 50% is the largest delta we've seen of any of these countries that have come out so far. And the U.S. actually has a trade surplus with Brazil. So unlike the justification of this being based at least some part on trade deficits, this seems to be much more about politics.
Laura Davison referring there to Trump citing a witch hunt trial against former Brazilian President Jair Bolsonaro as the reason for the hike in the levy. The right-wing former leader is facing trial on charges that he attempted a coup following his 2022 election defeat. Brazil's current president, Luiz Inacio da Silva, says he would respond to any unilateral tariff hikes.
President Trump also confirmed that a planned 50% tariff on copper imports will begin on the 1st of August. The higher-than-expected levy was signalled by Trump in comments to reporters on Tuesday, but the president took to Truth Social late on Wednesday to confirm the start date. Speaking to Bloomberg, the chair of the president's US Council of Economic Advisers, Stephen Mirren, said that the move is part of Trump's push to rebuild US industries.
You know, there are certain critical minerals, of which copper is one, that you just absolutely need if you're going to have a manufacturing sector. And having a manufacturing sector is important, not just economically, because it tends to be a high capital, high productivity field.
Stephen Mirren spoke to Bloomberg as the president also unveiled a new round of tariff letters yesterday. They set levies on imported goods effective from the 1st of August for those partners who fail to reach trade deals with the US. So the list includes a 30% rate on Algeria, Libya, Iraq and Sri Lanka, 25% duties on products from Brunei and Moldova, and a 20% rate on goods from the Philippines. Of those 7 countries, only the Philippines ranks amongst America's top 50 trading partners.
As the deadline for talks on US reciprocal tariffs nears, the European Union seems increasingly willing to accept a one-sided deal to stave off a trade war. That's the view of Bloomberg Economics, which says that in a best-case scenario where the EU faces only 10% tariffs and no duties on cars, car parts or metal products, the tariff shock would drop to about 5.5 percentage points, down from 9 points under the current policy. Former EU trade negotiator John Clark told us that the bloc is in what he believes is an impossible position.
I think this is the most difficult negotiation in memory, frankly, for the European Union, and I would not want to be an EU trade negotiator on this one. The goalposts are moving all the time. The EU is negotiating with a gun against its head of a 20% or 50% tariff in August, depending on what day of the week it is. There are doubts, I think, whether any deal that Trump inks will be actually honoured. And then the Commission is very divided about whether it should stick to principles, not accept anything which is W2 illegal, or be quote-unquote pragmatic and go for a quick, dirty deal of the kind that the British did.
You can hear that full conversation with John Clark on the Bloomberg Talks podcast. All of our key conversations in one place.
Now, in other news, Nvidia became the first company in history to reach a valuation of $4 trillion. The chipmaker's stock has risen more than 20% this year and is up more than 1,000% since the beginning of 2023. Bloomberg semiconductor editor Ian King says it could still go further.
So on a price to earnings ratio, 52 times, doesn't sound totally crazy, and that doesn't even get it into the top 10 list of semiconductor makers. So relatively, it's not that expensive. No other semiconductor company has ever had more than $100 billion of revenue ever, not even Intel at its peak.
King adds that the latest catalyst for the stock's boom has been a commitment to AI spending from Nvidia's biggest customers, showing demand remains strong. It's a stunning rebound after a rough start to the year when China's DeepSeek sparked spending fears across the AI space. Nvidia now accounts for 7.5% of the S&P 500 index, near its highest influence on record.
The British and French governments plan to order more Storm Shadow cruise missiles as they seek closer ties on defence and migration. The announcement comes as France's President Emmanuel Macron makes the first state visit to the UK of any European leader since Brexit. Macron hailed Starmer's work on Ukraine as bringing the two countries closer together.
But as well as this changing time from Ukraine to Middle East, I think the partnership and the friendship between the UK and France is absolutely, I would say, a game changer.
The UK is keen to get President Macron to sign up to a new deal on migration before he leaves later today. The two leaders will also dial into a meeting of nations willing to help Ukraine, the so-called Coalition of the Willing, including a US representative. It comes as Sky News reports that President Trump is likely to visit the UK at the end of July or beginning of August in an unofficial trip to his golf courses in Scotland.
This week, scientists have released a first-of-its-kind rapid attribution study linking recent deaths in Europe to climate change-driven extreme heat. Bloomberg's Ewan Potts has more now.
Scientists say the hot weather in Europe over the 10-day period to the 2nd of July killed an estimated 2,300 people in 12 cities. The research, led by a team at 2 London universities, found that climate change made the continent's recent heatwave 3 times more fatal, with man-made global warming increasing temperatures by between 1 and 4 degrees centigrade in the cities studied. The report comes as more and more countries weigh measures to mitigate periods of extreme heat. In London, I'm Ewan Potts, Bloomberg Radio.
The Bank of England is warning that UK bonds risk being hit by a wave of forced selling in an echo of the Truss-era meltdown. The central bank's financial stability report points to hedge funds borrowing £77 billion in the repo market to make big bets on the margin between government bonds and their futures, the so-called basis trade. The fear is that these small, highly leveraged players could cause a market blow-up if caught short. Officials also pointed out because some of these funds are domiciled offshore, the BOE will find it tough to keep track of the threat they pose to the market. It shows the perilous market backdrop that threatens to turn against Chancellor of the Exchequer Rachel Reeves.
And those are our top stories for you this morning. So thinking about the markets, the Brazilian real led emerging market currency losses on Wednesday, dropping as much as 2.9% because of Trump's tariff, 50% on the Latin American country. It was the biggest drop in more than 3 months for the real. This morning, the Bloomberg dollar spot index is softer, down 0.1%. Also, stock futures for the US are in the red, although they're in the green for Europe, up almost 0.2%. Let's see if that holds, given the uncertainty, the worries around tariffs and the tariff letters and the copper tariff. In terms of the bond markets, 2-year treasuries fairly steady in terms of yields, 3.85, 10-year yields at 4.34. Bitcoin hit a record high on Wednesday and it holds close to that level. We're up 0.3% this morning. And copper on the London Metals Exchange up 0.6% this morning. So pressure in the copper market still.
In a moment, we'll bring you more on what Donald Trump's trade letters have in store for Brazil, plus why top European sportswear brands are hoping for a run of success with running. But another story that we've been reading this morning, European countries have been talking about this a lot, Caroline, ramping up their spending on defence. But we've been speaking to some of the part-time soldiers who've signed up as reservists in different parts of the continent. This is a whole different part of the challenge where Europe's rethinking its defence, which is actually getting people to sign up to the armed forces, either as volunteers or as conscripts under military service rules. So we've spoken to people in Lithuania, in Denmark, in France, and some really fascinating insights about what motivates people to sign up. Our colleagues in France talking to a 20-year-old student who said that he signed up out of patriotism, not specifically to fight, but because he says there are other things that he can bring to being in in the army. And at the same camp, there was the oldest of the reservists, 60-year-old Dalila. She was previously in the Algerian Air Force before earning her master's degree and going on to a career in the French public service. And she also signed up because she wanted to reskill the skills that she had used in her previous career and didn't mind going back to the lowest rank because she said it was necessary to learn what the common practices are now.
Yeah, look, it's part of a huge rethink, isn't it, across Europe. Military service hadn't been as popular. Also, we've got an ageing population, I mean, in Britain and across the continent. But there is a massive mind shift that is taking place. And as you say, conscription, reservists, there is also pay. There's additional pay also for people who sign up. In a lot of these European countries, you can, for example, do your reserve days and also be paid for your regular job, whatever that might be. But yes, as you say, a massive mental adjustment, I think, in Europe.
Yeah, indeed. And we'll put a link to that story in our podcast show notes for you. Let's bring you the latest, though, on our top story this morning and the round of trade letters from Donald Trump sending Brazil's currency into a slump. The real plunging after the US president threatened 50% tariffs in the country, saying that it was in part due to Brazil's attacks on free elections. Our EMEA News Director, Rosla Matheson, is with us for more. Ros, good morning. This 50% figure, higher than most of the tariff rates that Donald Trump has announced. Why is he targeting Brazil in particular?
Well, yes, quite a surprise for the market to see this, and we could see that in the extent of the market reaction that came. There seem to be several factors at play here. One is that we had quite a bit of public wrangling between Trump and the Brazilian leader Lula, who was hosting leaders from the BRICS grouping this past weekend. And when Trump threatened to put a 10% levy on BRICS members, you got quite a public pushback there from Lula, who pushed back very publicly. And so that probably created a bit of tension between the two of them. You've also got this long-running issue of the former leader, Jair Bolsonaro, who is, somewhat of a friend of Donald Trump. And Donald Trump has, for a long time, accused Brazil of politically persecuting Bolsonaro. Bolsonaro, of course, is, about to face trial on charges that he attempted a coup. And he's barred from political office, which means he cannot currently run again in the next presidential election. Donald Trump has been accusing Brazil of persecuting Bolsonaro, calling it even a witch hunt of Bolsonaro and his families, and saying that the trial should end. So quite a direct insertion there by Donald Trump in domestic Brazil politics. And in putting the 50% tariff on Brazil, he actually cited this case and saying that he was making this charge due to what he called Brazil's insidious attacks on free elections. And so very much seems to be quite a political motivation behind this 50%, not just the pure realities of trade.
Yeah, because Brazil has a trade deficit with the US. So what lessons will other countries draw from this, that it's not just about the trade balance that President Trump is focused on?
Well, absolutely. So that is, the interesting thing. Again, as you say, Brazil is the second largest trading partner of the US, so this could affect it quite significantly. China, of course, is the first, but it exports a lot of stuff to the US, including steel products, aircraft and aircraft parts, and so on. But it does run a surplus with the US. And so the question is Donald Trump coming for countries purely on the basis of their trade relationship and their trade surplus? Is he coming for them because he thinks they have a lock on certain important things like copper, steel, and in the case of China recently, obviously rare earths as well? Do you have something that he wants to get his hands on more easily for US companies? Or is there a mix of everything in there, including his view on politics in your country or his relationship with your leader?
This is such an interesting time to be watching these developments as well. For now, Rosla Matheson, thank you very much for bringing us up to date, our EMEA News Director.
Now, let's turn our attention to running, which could turn around the fortunes of the sportswear brands Puma and Adidas as they look to make up ground lost to new rivals. These firms are also facing major risks from tariffs on countries like Vietnam, a big supplier in the region. Our EMEA earnings specialist, Chloe Millay, joins us now for more on the story. Good morning, Chloe.
Good morning.
why is running now such a key sport for Puma and Adidas?
Yeah, so running is obviously nothing new necessarily for Puma and Adidas. It's always been a space for innovation, but there is a renewed focus at the moment, and that's due to the intersection of a few things. Obviously, there's a growing enthusiasm for the sport. Secondly, those two big players have lost a bit of market share to smaller brands like Hoka and On, etc. And then finally, there is a tariff threat that is hanging over those two companies, and they've really hurt the shares over the last few months. So all of this makes it so that reviving the demand in that category really is key to sort of cushion that tariff impact and to take advantage of that sales momentum in the category. So I spoke to an analyst at Deutsche Bank who said that running is the most exciting category for growth over the coming quarters as well as this one. And he said that those companies really hadn't focused on running as much as they should have over the last 5 years or so. But now it looks like a smart bet, really, because all of this points to the running category as something that provides some sort of relief, essentially.
So how could these companies shift their strategies to respond to this momentum?
Well, one thing to look for in particular is what is going to happen with the new CEO of Puma, Arthur Holt, who just started the job a couple of weeks ago. So the consensus is that he's really keen to focus on that category, and in particular the Nitro line, which is which are shoes that are with the soles with nitrogen gas inside for the added bounce. So that CEO change might be a real kind of important catalyst for Puma. For Adidas, analysts are saying that the company is becoming more relevant thanks to record-breaking performances from athletes wearing that Adidas gear, and then also quite strong engagement on the running Instagram page of Adidas. So we could see the company kind of doubling down on those areas. Another thing to note is also that China might become even more of a key market. It has a national fitness plan, which is kind of promoting physical exercise among the population, and that could lead companies like Adidas to sponsor events and to sell pricer equipment there as well.
Okay, so investors, how do they feel about this?
Well, the idea from analysts is that those bigger brands start to get more traction in the running category, that could kind of lift investor sentiment. But obviously, they're starting from quite a tough position. So Adidas is down about 10% year to date. Puma as much as almost down 50%. So they have quite a long way to come back from. And obviously, the geopolitical context, the macroeconomic context kind of complicates that and makes it a bit harder for investors to focus on the positives.
Well, indeed, on that point, Chloe, what do we think that we might hear from these companies on the issue of tariffs and their upcoming updates?
Yeah, so obviously we've got brand new rates on Cambodia, Laos, Thailand, Vietnam, etc. So all of these are key supply hubs for the fashion industry, and that really complicates the picture. It means higher costs. It means probably having to raise prices. And Puma and Adidas are reporting right before, so on the 30th and 31st of July, which is right before the August 1st deadline that was imposed by Donald Trump. So they might be, as we speak, tweaking those earnings statements to kind of add a line about that caution and about how they might be thinking about, adjusting their supply chains, for example. But because there has been so much back and forth with the tariffs, I think it's quite unlikely to see very specific numbers on the impact, but there'll definitely be cautious commentary around this and what that means for the business going forward.
Yeah, okay, interesting. Chloe, thank you so much for being with us. Our EMEA earnings specialist, Chloe Millay, who's just about to get into another very busy earnings season, so thank you for being with us. Look, the only person, frankly, who knows much about running on this podcast, I suspect, is Stephen Carroll. I wonder whether you found a new running route in your new city now.
I'm still working it out. This is the problem, is that like you go one direction, you think, yeah, this will be fine, you realise you're actually running along a motorway. So then sometimes Google Maps is not the most helpful when you're looking for places to run. So all suggestions, answers on a postcard, please.
Yeah, absolutely. Okay, I've got some producers chiming in as well about how we are all runners, perhaps just not me.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.